Hi viewers, good to have you here. All right, you're welcome. If you're seeing us for the first time or you're joining us for the first time, we want to highly welcome you. Okay, this is E Plus Academic Resource Center where we take online tutorials for undergraduate and senior secondary students. Undergraduate of social sciences and management sciences. Okay, you're welcome. All right, so this is the part 2 of bank reconciliation. We've done the part 1. Okay, I'm going to share the link in the description. Okay. This is the part 2. So I'm going to do some explanation. Then if we can't be able to finish everything today, we'll continue with the part 3. I think that will be the final. And the part 3 will be where we get to solve a practical question to understand the whole idea of bank reconciliation. Okay? All right. So we are continuing from the methods, okay? The different methods of preparing bank reconciliation statements, okay? So there are two methods. So we're going to look into this method and look into a few things also. And if we can get into practical question, then we'll continue in the next class. Are we together? All right. So preparation of the adjusted cash book and bank reconciliation statement. Okay. This is the first method. Okay. This is the first method where you prepare the adjusted cash book. Then after preparing the adjusted cash book, then you prepare the bank reconciliation statement. Okay? All right. Now, I've gone ahead to write the format of CAM because there's something I will want to explain. So, I will not be wiping this off. The second method is at the back of this board. Okay? I've written that at the back of this board. So, when I finish this part, I'm going to turn over to the other side of the board to explain the second method, okay? So I don't want to wipe anything off because there's something I want to explain maybe by the end of this class. So please watch to the end and pay key attention. All right, so the first method is preparing the adjusted cash book and the bank reconciliation. Remember, why we have adjusted cash book is because of the discrepancies, the disagreements, because there must have been maybe errors or one thing or the other that must have transpired in the cash book, the bank column of the cash book. So there's need for us to prepare an adjusted. We have to adjust it to accommodate those errors and those discrepancies, okay? So this is the adjusted cash book. Then remember the cash book, the debit side has to do with money coming in or receipts, while the credit side has to do with money going out or payments, okay? So this is the adjusted cash book. Then we have the opening balance, then we have dividend. Every item you see here are items that brings money into the business or receipts into the business. These are the items you find here. And if you notice, these items are the same with what the items in the cash book in the part 1 of this class, where we noted some errors, some factors that might cause the differences. Yes, if you check very well, you see that those items in the cash book are those items here that are debited here. Why these items here are items in the bank payments. The bank payments. All these details are in the part 1 of this class. I'm going to share the link, okay? So all these details here are the bank payments. So since they are payments made by the bank on our behalf, okay? Therefore, we are supposed to credit them in the cash book. We are supposed to credit them in our cash book. And that is why you have them on the credit side. This is the debit side, sorry. I didn't write that initially. This is the credit side. Let me just note it small here. So this is the debit side, this is the credit side. So we'll have the balance brought down, the dividend, interest received. See, errors. We might have errors that affected the cash book. We might have errors. So that is why I noted them in both the credit and the debit side. So that those errors, when we correct them, it will affect the what? It will be indicated in the adjusted cash book. So that was why I put it in the format. Then after that, the balance carried down, then the balance brought down. Okay, so this balance brought down here, this balance brought down now is the new adjusted cash book balance. The new adjusted cash book balance. That is this is the balance you will use, okay, in preparing your bank reconciliation statement. So this balance that you have here, that is what you're going to start with. Balance as per adjusted cash book. Okay. Then you add unpresented checks. Okay. Now after you must have finished preparing your adjusted cash book, you go ahead to prepare the bank reconciliation statement. Okay, then you add your unpresented checks, then you deduct your uncredited checks. You deduct it. So let me indicate bracket with this. Yeah, in accounting we'll indicate with brackets. It means minus. Okay, then after that, then you add or deduct bank errors. You add or deduct what? Bank errors. Then after that, you get your balance as per bank statement. Sorry, I had to shorten this. This is bank statement, while this one is adjusted cash book. I had to shorten it because of space. Okay, so this is the format, the first format for the part one. The first method. Method one, preparation of the adjusted cash book and bank reconciliation statement. This is the first method. Then I'm going to turn over now. Let me show you the second method. Then I'll make few explanations as well. Are we together? I've gone ahead to turn over to the other side. Okay, I've gone ahead to turn over to the other side of the board. Now this is the second method, and the second method there is preparation of the bank statement only. Preparation of the bank reconciliation statement. Sorry, this is bank reconciliation statement. Bank reconciliation statements. Okay, bank reconciliation statements only. All right. Okay, then this is the format. Now you start with your balance as per bank statement. Excuse me, balance as per bank statement. Okay, then you less. Now when we are doing the first method, when we're looking at the first method, when we started with balance as per adjusted cash book, we added unpresented checks. But here in this method, as we're starting with balance as per bank statement, we are lessing unpresented checks. It's just like an opposite. Do you understand? It's just like an opposite form of it. Then here, uncredited checks, you add it. Okay, you add uncredited checks. Okay, then after that, you add or you deduct bank errors. These errors, we are going to, maybe the question we are going to be solving will have 1 or 2 errors in it, so that we'll understand how we did correction of errors. Okay, we did correction of errors. I'm going to share the link as well. Correction of errors. I'm going to share the link as well, so that you refresh your memory. You see why accounting is somehow interwoven. That is why you don't have to play with some topics, because they are interwoven. If you neglect any subject, it might affect you on the next subject. So it's good you have a good understanding of most of these subjects, because they are interwoven. Okay, because the correction of errors we did a few weeks ago, we are seeing them now in bank reconciliation. Okay, so no problems. I will share the link so that you refresh your memory. So we add or deduct bank errors. Then after that, we have a balance as per adjusted cash book. So these are the two methods. So I'm going to be sharing few things. I'm going to be sharing few important notes. Please, I need you to pay attention and watch to the end. Pay good attention and watch to the end. So if we can't solve a question under this class, in the next class we'll solve a practical question. Are we together? Okay, so these are a few important notes I want you to take note of. Number one, you may have a case where the cash book balance, okay, where the cash book balance is given and the bank statement balance is given in your question. Okay, you have a case where your examiner or what you're trying to reconcile, your cash book balance is given and your bank statement is given. Okay, in that case, it is safely to use this first method. All you have to do is just to substitute your balance, cash book balance. Then after substituting, you get your adjusted cash book, the new balance of your adjusted cash book. That is where you have to substitute your new balance, adjusted cash book balance here to get your. Now, since your bank statement is given also, you'll be able to know if your entries or your postings are right, because the cash book, the bank statement balance that will be given to you must tally with the your bank statement balance that you will definitely arrive at the end of your posting. So it's very easy for you to know if your entries or your postings are very correct, because you have your cash book balance, you have your bank statement balance. Both of them will guide you So if you are making any error, if you're not doing the right thing, you'll be able to dictate, you'll be able to know, because the bank statement balance and the cash book balance is given to you. Do you understand? Now, secondly, the second thing I want you to note is this. You may have a case where the bank statement balance is not given to you, only the cash book balance. The bank statement balance is not given, only the cash book balance. Now, in this case, just like unlike the first method, you'll not be able to ascertain if you are actually right or correct. So in this case now, all you have to do is just to exercise due diligence and ensure that you have done the right thing. You have your cash book balance, yes, you'll be working with that, but you don't have your bank statement balance for you to know if you're right or wrong. So all you have to do is just to make sure that you have done the right postings, you have entered your entries correctly. Okay, that way you just in good faith, just believe that you have done the right thing, because there's no bank statement balance for you to cross-check or to ascertain. Do you understand? That's the second note. Now, the third note, you may have a case where there's an overdraft. Overdraft. Do you know what I mean by overdraft? Overdraft, overdrawn balances. Okay? Now, what we mean by overdraft is this. Let's say, for instance, what you have in your bank account is 500,000. Okay? For instance, 500,000. Then you approach your banker and said you want an overdraft, and they issue you an overdraft of 600,000. They issue you, your balance is 500,000, so they issue you an overdraft of 600,000 naira. So the 600,000 minus the 500,000 will give you 100,000. So that 100,000 naira, that difference is the overdraft. That difference is the overdraft. So in that case, you have to indicate with a bracket to show that this is an overdraft. You are the one owing the bank now, not the bank owing you. I don't know if you understand it. So in the case where you have an overdraft, whether in the cash book balance or the bank statement balance, you have to indicate with a bracket. Everything remains the same. Don't change anything. The only thing you have to do is indicate to the bracket. That will show your examiner or show the auditors that, yes, this is an overdraft. Nothing changes. Please don't change the position of anything. Just indicate to the bracket that, so when they see the bracket, they will know that this is an overdraft. I don't know if you understand it. Number 4 thing I need you to note is this. You may have a case where the cash book balance is not given. Where this cash book balance is not given. Okay? This cash book balance is not given. So all you have to do when you start preparing your bank reconciliation statement, you will enter your entries. Leave this place blank. This first balance, you leave it blank. Okay? Then when you post your entries, okay? Then I think this one, you leave this one blank as well. Okay? You leave this one blank. You leave this one blank. Okay? Then when you finish posting your entries, then you prepare your bank reconciliation statement. Okay? Now, the balance as per, now this one now will be balance as per bank reconciliation statement. That's what you will start with. Hello? Let me come again. We are treating a case now where the cash book balance is not given. The cash book balance, not bank balance. The cash book balance is not given. And this is the cash book balance where it is not given. Okay? Let's assume it's not there. It's not given. So in a case like this where the cash book balance is not given, you will leave this place blank, fill other entries. Okay? Then this balance carried down also, it will be blank. Then, after you post your entries on the cash book, adjusted cash book, you will now start with balance as per bank statement, not cash book, because you don't have the balance. You don't know the balance yet. You don't have the balance of the cash book, adjusted cash book. You can't ascertain the balance yet because some information are missing. So you start with balance as per bank statement. That is the second method. Then when you start with balance as per bank statement, you enter everything. Then the balance here you're going to get here as balance as per adjusted cash book. That will be the balance you put here. The balance you get as per adjusted cash book, that will be the balance you put here. Then when you add and make your deduction, the balance that you get when you add these parts, you get the difference. The balance you get is the opening balance. Balance brought down. That is how you get your what? Opening balance for the adjusted cash book. Do you get it? Then finally, where you have errors, okay? Where you have errors, please take note. Cash book, errors that affect the cash book are corrected in the cash book, while bank errors are corrected in the bank statement. You don't correct bank errors in the cash book, no. You don't correct cash book errors in the bank statement, no. The bank errors are corrected in the bank statement, while the cash book errors are corrected in the cash book adjusted cash book. Are we together? So these are the difference. These are the important notes. Please take note of this. These things I just mentioned. Not quite long. Okay. In the next class, we are going to solve a question. Okay, to see get a better understanding of what we've just done, the part 1, the part 2. Okay, so that will be the part 3. All right, guys. Thank you for staying to the end of the class. All right. See you in the next class for the practical question.